Hey everyone, Longacres Finance here, and today I'll be taking a look at which 8 dividend stocks from my July high-yield dividend stock watchlist are poised for the best returns going forward. While I believe all 20 stocks on the watchlist are high-quality companies that offer generous dividend yields, I know that not all of these stocks will offer the same returns going forward. Trying to narrow in on which stocks can outperform in the future is no easy task, and I believe no one can do it precisely and consistently. But there are tools investors can use to help narrow down the number of stocks to focus on. One factor I like, and one that has historically been associated with better than average total returns, is earnings per share growth. Companies that have successfully grown their earnings over a period of time have typically also seen positive total returns. On an individual company basis, this may not always be the case, but collectively, stocks with growing earnings offer better total returns than stocks with declining or stagnant earnings. To target companies that are poised for growth in the future, investors can rely on analyst forecasts. 5-year forecasted earnings per share growth rates are easily accessible on various services online. You can find this data on Yahoo or Finviz for free for almost every stock out there. I have retrieved the 5-year EPS growth forecast for each of the 20 stocks on my July high-yield dividend stock watchlist. But I have one additional factor that I will be combining with earnings growth to hopefully make the forecast stronger. We will get to it in 1 second. But first, if you're enjoying the video, please hit that like button and subscribe to the channel for more dividend stock videos. Okay, so the additional factor I will be using is current valuation, because if a stock is undervalued today, it has the potential to offer an even better return should the price revert back to the mean. And vice versa, if a stock is overvalued, we would expect the opposite to happen. An overvalued stock may not grow as quickly as analysts are forecasting, because it may revert back down to its fair value in the future. If you have watched any of my videos in the past, you probably know I like to use dividend yield theory for stock valuation. It's a quick tool to gauge the potential valuation of a stock right now. The method works based on a simple principle, that dividend stocks revert back to their long-term trailing dividend yield. So if the current dividend yield is higher than the trailing dividend yield, the stock is undervalued, and potentially a bargain. I already shared this valuation data in my monthly watchlist videos, so I have all the data that I need. If you haven't seen the July high yield watchlist, you can check out that video using the link at the top of the screen. In order to combine these two factors, I will need to assume that a given stock will revert back to its fair price over a 5-year period. Since I'm using a 5-year earnings growth forecast, the two will align nicely. So I'll need to convert the current under or overvaluation into an annualized rate of growth that will bring each stock back to its fair value. This is much simpler than it sounds. The handy-dandy formula to annualize the cumulative return is as follows. 1 plus the 5-year return, which in this case is the under or overvaluation. Next, we take the sum to the power of 1 divided by 5. 5 because we are looking at a 5-year time period. And finally, we subtract 1 from the result, and voila, we have an annualized rate of return that would bring each stock back to its fair value over a 5-year period. Now, since my undervalued stocks are identified with a negative percentage, I will need to flip the sign of each annualized return when combining it with earnings growth rate, so that undervalued stocks get a boost and overvalued stocks are penalized. Ready to see which 8 stocks have the best combined EPS growth forecast with reversion to fair value? Stock number 1 is MT Bank with an expected 20.27% annual growth rate. This is a combination of 14.2% forecasted earnings growth and 6.07% potential growth based on current undervaluation. Stock number 2 is Principal Financial Group with an expected growth rate of 16.5%. This is a combination of 15.68% forecasted earnings growth rate and 0.82% potential growth based on current undervaluation. Stock number 3 is Merck with an expected growth rate of 12.7%. This is a combination of 10.82% forecasted earnings per share growth rate and 1.88% potential growth based on current undervaluation. Stock number 4 is Philip Morris, with an expected growth rate of 12.07%. This is a combination of 13.3% forecasted earnings growth and minus 1.23% due to potential current overvaluation. Stock number 5 is Broadcom, with an expected growth rate of 11.56%. This is a combination of 8.5% expected earnings growth and 3.06% potential growth based on current undervaluation. Stock number 6 is Truist Financial, with an expected growth rate of 10.25%. This is a combination of 8.9% expected earnings growth and 1.35% potential growth based on current undervaluation. Stock number 7 is 3M Company, with an expected growth rate of 9.74%. This is a combination of 8.03% forecasted earnings growth and 1.71% potential growth based on current undervaluation. And stock number 8 is Pepsi, with an expected growth rate of 9.64%. This is a combination of 9.07% expected earnings growth and 0.57% potential growth based on current undervaluation. The expected growth rate of all 20 stocks on my watchlist is 8.9%, so the top 8 stocks potentially all offer better than average forward returns. The future is unpredictable, and these 8 stocks may not all hit their forecasted returns over the next 5 years. Obviously, there are many other factors that will play a role in their return going forward, but statistically, these 8 stocks should produce more winners than the remaining 12 stocks on the watchlist. I will start tracking this data going forward to find out if such analysis proves to be fruitful. I encourage everyone watching to do their own due diligence before making any investment decision. Let me know in the comments below if you like this type of future forecast, and I may apply it to my other watchlists. That's it, thank you for watching, and see you next time.